Today I will be presenting the business introduction and the transaction summary for our group's project. The business we studied is Seza Smart, a dynamic retail business located at UiTM Puncak Alam. This business commenced its corporation in 2025 with initial capital of 50 contribute by the owner. The primary focus of Seza Smart is to provide a variety of consumer products to meet the daily needs of students and the surrounding campus community. To manage this business efficiently, we implemented the accounting cycle to ensure every transaction is properly documented and reported in accordance with accepted accounting
Moving on,
principles.
let's take a look at the major transaction flow that took place throughout September 2025. To make it easier to understand, we can categorize this activity into three main parts. First, financing and capital. The owner invests 50,000 cash on 1st September, followed by a bank loan of 20,000 the next day to boost the business working capital. Second, asset and inventory investment. We purchased initial stock and restocked inventory with a total value of 30,000, which include 18,000 on 7 September and 12,000 on 9 September. Third, operating expenses. Seza Smart also paid for monthly commitments such as a shop rent amounting to 1,300 and staff salary of 1,700 to ensure smoothly daily operations.
Next, these transactions were translated into our accounting system through the general journal using the double entry system. For example, on 1st September, when the capital was introduced, we debit the cash account by 50,000 to show an increase in asset and credited the capital account by 50,000 showing an increase in owner's equity. On 2nd September, the bank loan was recorded by debiting the bank account for 20,000 and crediting the bank loan account for 20,000, representing an increase in liabilities. The double entry system ensure our accounting equation remains perfectly balanced, with the initial base totaling an equilibrium of
Today, I will present
70,000.
the trial balance of Seza Smart for the month ended 30 September 2025. A trial balance is a financial statement that lists all ledger account balance at a specific date. It is prepared to ensure that the total debit balance equal to the total credit balance, which help verify the accuracy of bookkeeping records. Now, let's look on the debit side. The business has assets such as cash, bank balance, account receivable, shop equipment, shop furniture, and prepaid insurance. It also includes purchases, expenses such as rents, utilities, salaries, advertising, stationery, and drawing by the owner. Next, let's look on the credit side. The business has account payable, capital invested by the owner, a business loan, and sales revenue. The total debit balance is 73,700, while the total credit balance is also 73,700. Since both total are equal, the trial balance is balanced. This shows that the accounting record follow the double entry accounting system and mathematically
Today I will
correct.
present the statement of profit or loss for Seza Smart for the month ended 30 September 2025. First, I will explain the additional information and adjustment. The first adjustment is depreciation on shop equipment. The equipment is depreciated at 1% per month using the straight line method. Therefore, a depreciation expense of 100 ringgit is recorded for September. The second adjustment is for utilities expense. An amount of 150 has not yet been paid at the end of the month. This is recorded as an accrued expense to ensure the expense is recognized in the correct accounting period. The third adjustment is the closing inventory. On 30 September 2025, the inventory was valued at 28,000. This amount is used to calculate the cost of goods sold.
Credit accumulated depreciation, shop equipment 100 ringgit. Second, we record the accrued utilities expense, debit utilities expense 150 ringgit, and credit accrued utilities 150 ringgit.
Now let's look at the statement of profit or loss. The business achieved sale of 3,500 ringgit and had no sale return, giving net sale of 3,500. After calculating the cost of goods sold, which amounted to 2,500, the business earned a gross profit of 1,000. There was no other income during the month, so total income remained 1,000. The operating expenses consisted of rent, utilities, salaries, advertising, stationery, and depreciation expenses with a total of 3,750. As a result, the total expenses were higher than the income earned. Therefore, Shazza Smart recorded a net loss of 2,750 for the month ended 30 September
Next, I will
2025.
explain our statement of financial position, also known as the balance sheet as at 30 September 2025. This statement shows the financial position of our business at the end of the accounting period by presenting its assets, liabilities, and owner's equity. So, firstly, under non-current assets, our business has shop equipment with a cost of 10,000 ringgit. After deducting accumulated depreciation of 100 ringgit, the carrying amount is 9,900 ringgit. This shows that part of the equipment's value has been allocated as depreciation expense. We also have shop furniture worth 5,000 ringgit. Therefore, our total non-current assets amount to 14,900 ringgit. Next, under current assets, we have inventory of 28,000 ringgit, which represents the goods available for sale in our mini mart. Accounts receivable of 900 ringgit refers to the amount owed by customers who purchased goods on account. In addition, we have 2,600 ringgit cash on hand, 9,800 ringgit in the bank, and prepaid insurance of 1,200 ringgit, which represents insurance paid in advance. As a result, our total current assets are 52,500 ringgit, giving us total assets of 67,400 ringgit. Moving on to liabilities, our business has a loan of 20,000 ringgit, accounts payable of 200 ringgit, which is the amount owed to suppliers, and accrued utilities of 150 ringgit, representing utility expenses that have not yet been paid. Therefore, our total liabilities amount to 20,350 ringgit. Lastly, under owner's equity, the business started with owner's capital of 50,000 ringgit. After deducting the net loss of 2,750 ringgit and drawings of 200 ringgit, the remaining owner's equity is 47,050 ringgit. Finally, total liabilities of 20,350 ringgit plus owner's equity of 47,050 ringgit equal 67,400, which is the same as total assets. This confirms that our statement of financial position is balanced and follows the accounting equation, which is assets equal to liabilities
In
plus owner's
conclusion, our
equity.
project on Shazza Smart successfully demonstrates the practice execution of a complete accounting cycle within a retail environment. By systematically recording transactions from the initial RM50,000 capital injection down to our final ledger entries, we gain a transparent view of the business performance. Our statement of profit or loss revealed that while Shazza Smart generated a positive gross profit of RM1,000, it ultimately faced a net loss of RM2,750 due to foundation operating expenses like rent, salaries, and utilities. This net loss highlights exactly why formal accounting is indispensable for any business owner. Without the structural clarity provided by the accounting cycle, operational inefficiencies and high expense margin would remain unchecked. With a final asset evaluation standing at RM67,400 and a clear closing inventory of RM28,000, the data compiled in this project now provide the owner with the exact insight needed to optimize future pricing, manage stock efficiently, and transition Shazza Smart into profitability.